Otis, you've done it yesterday. You made the announcement. I've got the press release here. Why did you do it? It's not silver, it's gold.
Yep.
Do you know
Again,
what do you know?
You strip it back. What's our job? To create wealth, right? So it's when you do that, you're not like tied into ideologies effectively, right? It's really about generating returns for shareholders and the community and our employees and the whole kind of continuum of the business. And it's really founded on if we were in 2013 and gold had tumbled from 1900 down to 1600 in April 2013, going down to 1300 or 1400, this wouldn't be the time to do this kind of deal. You weren't in the right part of the market. So we're very much market focused and market trend driven. And I think that's the important part of the industry. There's times to buy, there's times to sell, there's times to hold, there's times to explore, there's times to build, right?
Right.
I didn't put that in the right order, but there is different aspects that need to be done at different parts of the market cycle. Right now, we firmly believe we're back in a precious metals bull market. And that wasn't like, over the past couple of weeks with the horrors that are happening with the coronavirus and everything. This is from May last year when gold moved through 1375 through 1400 and it was game on, right? Silver is trailing, of course, but gold, it's game on. So that's why we bought this now. But what it does is it increases our precious metals or total resource base by 450%. That's just on M&I. It's more when you include inferred. The inferred goes up by 6,000%. And importantly, it switches our mix of base metals. Our mix of metals. So right now we're 50% silver and 50% base metals. After this transaction, we're over 90% precious metals. So that's a very important switch as well. Continuing on, it completes our growth pipeline. We have production, we have exploration, a big portfolio there. Yeah. Now we've got an excellent development project in the middle.
Fantastic.
So you can really that improvement as well as having the torque that you have from exploration.
Got it.
And that's what.
Got it. So if I may interrupt, okay, you've got the blend of production, development, exploration. You've changed the mix from the 50-50 from base versus precious to 90-10. It's great. So you're making all the right moves. I think the interesting thing that you said there was the fact when you started the conversation about gold, it was before gold started moving. So it suggests some foresight there. So this wealth that you're going to create with Otis, what's the cost of the wealth that you're going to create? So what's it cost you? How much are you going to have to spend, and how much focus are you going to give it?
Yeah, so with Otis as well, we're adding their exploration or VP exploration to the team. Mm-hmm. He lives in that part of the world. Mm-hmm. Great guy, Alan Roberts, trained at Randgold, so experienced all over the world. Very obsessed with this project. It's a great project, right? So the goal is keep on the focus on stabilizing Platosa, start generating cash flow from there.
Yeah.
With Kilgore, again, the Otis asset, right now it's about doing the studies in support of another PEA or an updated PEA over the next while, doing the exploration to grow the resource. Right now, the PEA provides for 81 million of capital for 5 years of mine life at 110,000 ounces gold a year at an all-in sustaining cost of around $830. It's a very nice project. At $1,500 gold, it's a 53% IRR and 185 million NPV at 5%. So a very quality project, but we're not building that quite yet. It's still in the study stage, so it's not going to cost a ton of money. What we do want to do there, though, is look at the bigger opportunity, and that fits into our exploration and discovery portfolio. There is what we look at Kilgore. It's like a Round Mountain analog. So Round Mountain is a mine that Kinross has been operating for years. It's been in production since 1977, has produced 14 million ounces over that period. So an exceptional deposit down in Nevada. Mm-hmm. This is a very similar kind of geology. Now, Round Mountain at surface, you've got half a gram oxide, but as you get to depth, much higher grades. And here, there's a series of drill holes which really haven't been followed up on. A number of them have actually ended in mineralization. We're talking like 95 meters at 4.2 grams, 30 meters at 5 grams. A series of these holes. So it's really chasing that Round Mountain opportunity that fits into our bigger exploration play perfectly. And that's from Platosa looking for a big CRD to Silver City looking for a new epithermal district to Evolucion, on the continuation of the Fresnillo silver trend, and now this is part of the game as well. But again, on that kind of stuff, it's intelligent exploration, doing your science from the start. Drilling is the last thing you do to prove the theory and then define the asset, right? But we take every single aspect of geophysics, of geology, and I'm getting too far down the geological wormhole here. I'm a geologist, not a geologist. But it is like kind of really painting the whole picture of what the opportunity is before you spend the significant capital on drilling and then grid drilling to define.
Okay, so let's get back to my question, which was how much money are you going to need to spend? Because I think you've got 5 million left. 4 million is going to Mexico, 1 million Germany. You told me you've got 10. You've got 5 million left. Is all that going into Otis, or are you going to raise additional money to develop this wealth that you're talking about?
Right. So the first is that as we turn Platosa around, that will start generating cash flow, which will take a lot of the burden off and cover kind of.
But that's towards the end of the year, isn't it? That's what you said. How do you allocate money now?
So I think one of the things is, and the reason we're doing these things now, is that it's a different market, right? In this market, people are paying for exploration. If you really look at the money raised since January 2019, $1.7 billion, something like 70 or 75% of it went into exploration. And why? Because that's where the greatest returns are. Like, we're finally back, and it happened, I think in 2018, you could see discoveries and stocks would just fly and go up 10 times, 20 times, right? And in this market, when you look at, say, a Silvercrest or a Great Bear, incredible returns on the market for incredible assets that have been funded from the market. So if you have the right thesis and the right, focus, that money is there. And that's the difference of the market we're in versus the market we were in, even last year and certainly 2 or 3 years ago.
Well, I think that's the case if you're able to articulate your model. Like, if I say Great Bear, great example. And there are other business models that we've looked at and explored, and CEOs have been able to articulate it. But, I say 50-60% of CEOs go, we're just going to drill holes. So that's their thesis, right? Which is maybe the right thing to do, but it's hard for investors to then differentiate between companies as to which ones they should target. So I've enjoyed listening to your thesis, as it were, today. But like I say, so on Otis, your idea is to just sit back and evaluate what you've got. You've got a PEA, which is, it's the start of a process. So what are you going to be doing this year in terms of, is a PFS on the card this year?
So I think the first thing is improving our studies and understanding of the project. And those studies are going to move towards an advanced or an improved PEA or PFS ultimately. We haven't closed the acquisition yet, so we're not talking about timeframes yet. That's
sure.
Sure. Give us a month or a few months on that till we put the timeframes. Put a timeframe for the timeframe. But
okay.
The ultimate goal here is, from what we have right now, very solid base, great PEA, great NPV and IRR, but really growing a resource that supports a 10-year mine life at 100,000 ounces a year. That's something that's very accessible by the market, by analysts, and something that you want to build. As well, at the same time, looking for that bigger opportunity, the multi-million ounce deposit. And that's why Agnico is a shareholder. I'm sure we'll talk about shareholders as well.
We are.
It is a bigger opportunity that has to be part of the focus as well.
So, okay, that's a good point you raised. So you haven't yet closed it. What's the timing on that?
So we announced the transaction yesterday, on February 24th. We will be mailing materials in mid-March. Mid to late March at the latest, and aiming to close in mid to late April. Okay,
you didn't get much of a market reaction when you made the announcement. I'm just trying to read around chat rooms and forums. People don't seem to understand why you're doing it.
People don't like change, and certainly we've been Mexico's highest grade silver producer for a long time. But our stated vision.
But you got to make money, though, haven't you? You can't. It's all well and good having high grades, but you're not making money. It's no good to anyone, is it?
Yeah, I mean, I think one of the key things is looking at the silver space right now. Silver has been trailing gold significantly over the past long time now. In an 89-to-1 silver to gold ratio. What we're doing here is buying. It goes back again to that, multiplying our asset base and moving into precious metals. Lead and zinc, certainly in the global economy and everything right now, are not the place to be making money.
Yeah.
Especially when you've got treatment charges, increasing year over year now. We had incredibly low treatment charges for a period 3 to 5 years ago, and now they're kind of back to the historical norm. But metal prices are coming down, so you just have that, margin getting crushed. So this is an asset that we're buying with, producing paper, right, to buy an asset in the ground that we think has great value in it. And one of the things that, when we look at the market now as well, the junior developers that aren't financed, right, they've just very much underperformed the market. The finance developers have flown. They're up 63% in 2020. The senior producers have skyrocketed, right? They're up 30-40% for these big companies. That's a big move. And that's what you would expect to see at this point in the market. When you look at, you compare this market to 2002 to 2011, 570% returns over that period. For us, since 2016 to now, it's around 48% return. So we're really in the early days of that market, and we're seeing exactly what we would expect to see in the early days of a new bull market, right? The money first starting to go into seniors, the generalist money going into seniors. What we've seen, which I really like, is the money going into explorers for discoveries, mostly it's post-discovery. But if you don't have the development money, that's a little bit tricky to get right now. So this combination increases our size, makes us more financeable from a development and exploration perspective, and really kind of completes the story and sets us up to really ride this new bull market.
Do those treatment guys make money?
Ooh, it's a good gig.
Just an idea. You can have that. Right.
Well, you got to build a smelter though, right? That's the
just buy it. Just buy one.
Be the trader. The man in the middle is always good too.
I know a guy.